morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's 690th installment of Short-Term Trading Live with Oscar. Traders, this video is coming to you live from the windy city of Chicago in a hotel room. But you know me, I never, ever, ever quit. Traders, futures trading is risky, and if you do not understand the risks involved in trading, you should not be trading futures. But for you cowboys out there that don't mind trading, listen up, everyone. Listen up, OMNI. You left me in a hotel room for a day and a half to sit and read newspapers, so you guys are in trouble. I've been through Barron's, Wall Street Journal, Investors Business Daily, the New York Times, Financial Times, USA Today, just to name a few. And traders, I'm going to start this video off. This video is being filmed on Saturday night for trading on Sunday through Monday. That would be February, I believe that would be February 6th, Sunday through Monday, 2011. All right, traders, listen up. I started looking at the papers, and as I read through the papers, I study them. I read cover to cover what's in the newspapers on the weekends, and I don't really listen to the news to trade off of. I listen to the sound coming from the street. Is it bearish? Is it bullish? Does it sound like the economy is going to fall apart, or does it sound like it's getting better? And let me read to you just some of the things that I read while I was studying. Retail sales, auto sales pick up. Beidou's revenue doubles. Solar sector adds to gains. Medical IPOs, 8 of them jump after initial offerings. 8 IPOs last week. Serona rises on overseas growth. Weyerhaeuser, profit margins double. Clorox tops expectations. JDS Uniphase and other fiber optics soar. Fiber optic testing gear makers surge. Profit outlook brightens at Ross stores. Aetna jumps because payouts look fantastic. Their views for payouts. Verizon iPhone sales off the hook. Brazil stays a hot investment and an attractive investment. The list goes on and on compared to the negative data that I've seen. So the data is positive, traders. You cannot deny some of these things I read to you, but we are not done. Then I go through more papers and I read, economic gains suggest hiring could pick up for 2011 out of Washington. Activity in America's manufacturing and service companies has reached a level not seen since before the recession began, suggesting a strong year for hiring this year. The service sector, get this, which employs nearly 90% of the American workforce, is expanding at the fastest pace we have seen in 5 years. Traders, that is no longer a recession. That's a recovery that's gaining legs. It's turning into an expansion. Then we have this. The last video I left you, traders, I left you out a bond chart, and I said to you, don't worry about Egypt, don't worry about anything else out there. The technical analysis says the bonds are at a bear flag and they are going to break down. I did that video for you last Wednesday. They broke down Thursday, they broke down Friday. What that tells me is fundamentals always come out in the charts first. The charts told us sell bonds no matter what the news is. Bonds broke. Now let me read this to you. Wall Street Journal this weekend. Bonds get a Fed spooked move. New York Treasury prices lost ground for the 5th session in a row, boosting speculation that the Federal Reserve could start withdrawing from its monetary stimulus for the economy earlier than expected. Reinforcing a view among key market analysts that the economy recovery is gaining strength. Traders, do the fundamentals always come out in the charts first, or what? We gave you that bond trade. We gave you that bond chart. We told you don't worry about Egypt. Don't worry about anything. You go short those bonds. When we do the chart segment, I will show you where bonds are now. In fact, traders, I would like to show you a few charts, so I'm going to have to hurry this video up slightly because I'm doing it alone in a hotel room, and the production's going to be big on this one. But I want to say this. Please come down and meet me at my site. It's www.livewithoscar.com. Jump into my free trading rooms and allow me to help you become a better analyst which should in turn make you a better trader. Now, I don't want to waste too much time here, traders. I want to get right into the charts because I got a few of them to show you, and I think they're quite interesting. So with no further ado, let's go look at some charts. Okay, traders, talk about fundamentals coming out in the charts first. Wednesday night, get in front of this camera, I show you this very chart right here, and I said, traders, don't forget, don't listen to the news, don't worry about what's going on in Egypt, don't worry about anything else. You look at this picture here. It shows a well-defined bear flag. And I said that we will fall through this flag because all the analysis that I did around the bonds tells us that we should fall down through that flag. So this is what a bear flag looks like. Now I am going to add in the days that just passed, these last couple of days that just passed. I want to add them into the chart, and I want to show you what happened next. So look at this picture. Look at the way we broke down, traders. Boom, bang, all the way down to here. The fundamentals come out in the charts first or what, baby? Yeah. So there you are, traders. Follow the technicals. Don't listen to the news. Don't follow the fundamentals. Technicals come out in the charts first. That was a beautiful play. Look at how far we have dropped now that we're down out of the bear flag. And I think bonds continue further, so I'm not ready to cover those shorts yet. So that's the bond chart, traders. Let's go look at another. Okay, traders, I'm showing you now the Euro daily bar chart, the March contract for the Euro currency. 2 days ago, I pointed out a swing day, and I said, being that the currency has been going up for so long, let's wait on that swing day, see if it turns out to be one. It is a swing day, so we sold them right here on Friday, and it dropped, and it was a great trade. But the idea behind this chart is to show you that swing day. You see what it looks like? It was going up for a while the day before, then we rallied higher than the day before's high, turned around and settled by its lows. That is your swing day. I showed that to you for a reason because I want to take you to the gold chart next. The swing day produced a down move, right? Let's go look at the gold chart. Okay, traders, here we are, April gold daily bar chart. You had a few days up, and look at that swing day. That is exactly the same look that was left in Euro on Wednesday evening, and Thursday, Friday, the Euro cracked. Now we are looking at the gold. The gold has a swing day, and traders, I've shown this to you before, but if you condense this chart a little bit, you should recognize that this is starting to look like it's turning into a top in gold. This whole area right here is starting to look like one big top, and that is what I had illustrated to you in many, many videos, to please be careful of this gold because it looks very toppy up here. We dropped over $120 since I told you that the top looked like it was building, and now we have a swing day, which should produce a couple of down days at the beginning of this week. So there's the gold, traders. Now I'd like to show you the big kahuna, the ES. Okay, traders, we're looking at the E-mini, the ES March daily bar chart. Well-defined channel, looks fantastic. That last dip we had a few days ago went right down to the channel line like it did here, like it did when it started, and rallied right up. We are now poised to make new highs. We are taking out the previous highs we did on Friday, and I would buy pullbacks in the E-mini on Monday, no doubt. That looks like a very strong looking chart with bullish indicators. Now let's go look at its leader. Okay, traders, we are looking at the leader of the ES, the Nasdaq daily bar chart, the March contract. Again, beautiful bull market, very, very sound, very strong. All the pullbacks seem to go higher. And remember the lessons in bull and bear flags I gave you in our last video, plus that lesson you just seen in the bond bear flag. Well, this, my friends, is a bull flag, the opposite of the bond bear flag. We were in this flag for days on end. We got above it on Friday, broke out through it, settled above it. That Nasdaq is absolutely poised to go higher, and we are buying the dips on Monday. OMNI loves these charts, OMNI loves the indicators, and OMNI is looking to go long on pullbacks. So, traders, you've seen the charts. I mean, come on, you see that swing day? The one that worked in Euro? It sure does look like the gold's going to get hammered again. And we spoke about gold many times the last 3 or 4 weeks, and I tried to warn many of you analysts that the gold looks like it's topping out. Now we have a fat swing day to look at, and we will keep our eyes peeled on that gold. How about that bond move once again? Fundamentals in the charts or what? Was that a beautiful flag on that bond chart? Now what else do we have? You got the Nasdaq, you got the Russell, you got the ES, they're all poised to explode. That Nasdaq, you see it in that bull flag? Traders, in the last video I did for you, I showed you a series of flags, bull and bear flags, pointed out the bear flag in bonds, told you to short them. Well, we have a bull flag in the Nasdaq, which I showed you in that same video a few nights ago, and we are now breaking out of that bull flag, as you've seen. So we are poised for higher levels. All right, traders, that's about all I'm going to give you in this video. Please make sure you come to the site. I will be there. The cameras will be on. The site will be live, even though I'm here in Chicago. And remember, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. If you do not understand the risks involved with trading futures, please do not trade futures.